Hello and welcome back to Coin Lady channel. As bulls and bears await the next major move in the cryptocurrency markets, volume surges 92% at the start of this month. A co-founder of Glassnode has even predicted that the bears will come to regret their positions, as an upward movement is more likely. The future trajectory of XRP, according to some analysts, is dependent on Bitcoin, and they're talking in the short term. However, Bitcoin is always the market leader if we're talking about the big picture, as we all know. Of course, all of this is taking place against the backdrop of ongoing bank instability. Before we get started, I want to tell you about some of the recent absurd price activity in stocks, namely bank stocks. It's also possible but not guaranteed that there will be additional bank contagion. What the Fed decides to do is a key factor, and we should learn more about that tomorrow. So, we'll see, but first, let me be clear, we're going to dive into it. I come from a completely monetary free background. You should not buy or sell anything based on anything I say or write because I am not giving financial advice. As I record this video, I do so merely as a hobby and for fun. I'm just an enthusiast who enjoys making YouTube videos on crypto-related topics. Oh, and if you were wondering, the current time is 4:57 p.m. Moments at 46 cents. Bitcoin at $28,731 USD on May 2, 2023, Central Standard Time. Bitcoin accounts for 2,646.34% of the market valuation of the asset class, which is slightly over $1.20 trillion. Oh, right. If it were at 26, it would indicate that we just experienced a fantastic alternative season. Therefore, I would not say that. However, someday. Maybe one day we'll find it over there. At 55 on the scale from 0 to 100, this is the crypto fear and greed index. As a result, investor greed is still driving the market in the wrong direction. Right, taking a slight downward turn. Here's today's headline then. The price of XRP, the sixth largest cryptocurrency by market capitalization, dropped in the beginning of May, but that didn't stop trading volume from increasing by 92%, as reported by CoinMarketCap. The quantity of XRP traded by market participants increased by 92%. And those of you who are interested can see for yourselves, it's there on your screen. The following information was copied and pasted from CoinMarketCap. Right. An increase in volatility is often followed by a surge in trading volume, which could indicate a change in investor sentiment. It may send a signal. What I can tell you is that in this particular case, it seems crystal clear. Therefore, I think the co-founder of Glassnode is correct in his assumption that we are going to see a move to the upside, which leads me to the next section. And if that's the case, then XRP will likely follow suit, as is typical for this asset class as a whole. Cryptocurrencies tend to move together. This might be good news for XRP. Here's a headline that proves the Bitcoin bears wrong. Glassnode's co-founder is awarded $30,000. In a recent interview, the co-founder of Glassnode predicted that Bitcoin's price would reach $30,000 soon, proving that market bears were wrong. The current state of the market, which appears oversold, suggests that a bottom or uptrend may soon be forming. The analyst stressed the importance of the $28,000 price level as a battleground for Bitcoin, when either bulls or bears will be shown largely wrong. Indicators suggest an oversold market and a possible uptrend in the near future, thus bears are predicted to be on the losing side here. This is the guy's actual tweet, by the way. Bitcoin is a battlefield, as Negentropic pointed out. Also, remember what I said earlier, we've already surpassed that point. Battleground population, 28,000. Someone is drastically off the mark. The market appears to be oversold by bears, which, if right, would point to a bottom and subsequent upswing. Look at what Tara, a chart analyst and member of the XRP community, has to say. Road XRP is currently dependent on Bitcoin and needs volume to break the current resistance level. For 47.8 cents. We have seen such a sluggish market. This is absolutely not the moment to make a deal. Until we have the okay from Bitcoin, I think we should just let it fluctuate sideways. That's the case rather often, as I mentioned right at the start of this movie. It's intriguing to see that Harry is also considering a pricing point that's about equivalent to the one you're looking at. Harry, he's currently tweeting at Geraldo XRP. I guess it was just yesterday that I was mentioning him. In our town, he's well known for. XRP price touched around $4 towards the middle of December 2017, marking the start of the largest bull run in the cryptocurrency's history. And he even identified the very pinnacle of the offending object. In case you missed it, I also discussed this in greater depth in a video and yesterday. He made the statement the day before, and he rarely uses language like this. I will thus pay close attention to whatever he says that indicates the future course of XRP or establishes target prices. He thinks the price of XRP will eventually reach $3, and that's being conservative. But if you take into account his explanations, you can see why. But he thinks it may be much higher than just $3 here, considering he even said this, maybe a really great ruling for XRP related the SEC v Ripple case, legal clarity, and so on. I hadn't mentioned it on the channel yet, but he also tweeted out XRP, a condensed version of the story. Any traders out there? I have an idea. After sending a tiny fire emoji, you should keep a watch on the price movement returning through the month's open marked up at 47.7. Again, identical price level, and because I'm not a trader, all I'm really interested in is the general trend that these analysts see developing. And my position is to be completely hands-off after the purchase has been made. Nothing I buy ever increases in value, and everything I acquire either goes to zero or makes me want to sell at a loss. I'm done rambling now. Just like that, it's over. I just keep everything extremely basic. I don't. To clarify, I do not mean that every single trader in the world is a loser. So, for those who don't get it. In a word, yes, I'm awed. I applaud your efforts. I really mean it. Nonetheless, I'm curious as to whether or not you're doing well monetarily. But I thought, man, I really don't want to be living a life like that, where I'm always worrying about whether or not I'm making the proper choice and whether or not I'm getting in and out safely. There are many opportunities to do so, but I decided that financial success isn't my top priority. I intend to eventually sell my crypto holdings, but in the meanwhile I'm interested in holding onto them for as long as possible. Well, naturally, I'd always say that whatever happens with crypto is a terrible wildcard event. Seriously, who can say? And speaking of financial institutions, how are those? The other day, I reported that as First Republic Bank failed, the government stepped in, and JP Morgan eventually acquired its holdings. I've recently observed that there was little unfavorable reaction from the markets. In a nutshell, they were basically just like, yeah, whatever about crypto. Similar events, resembling a bank collapse, occurred a few months ago. However, this raises the question, is it contagious? Also going to be influenced by the Fed's actions, as I mentioned at the beginning of the video. And the humor is doubled. It's as though everyone is counting on the Fed to solve this crisis. In my judgment, though, it was those women who were the original source of the problem. Yes, let them do it. The government always seems to be the source of a catastrophic event. For whom should we search as the? To save us. Oh, right. Those who are directly to blame for the issue at hand. Right. Look at this, please. The letter from Kobayashi reveals this. Talk about what's underneath. This morning, someone with 285,300 Twitter followers wrote. It was 9:20 am on that day. Multiple stocks in the regional banking sector have dropped by 20% or more within minutes as news of the Kobayashi letter has spread. Losses for PacWest Bancorp have risen to 29%. The stock market has been put on hold. Presently, Western Alliance Bank is down by 25%. The stock market has been put on hold. The shares in Metropolitan Bank has dropped by 24% and is currently suspended. 20 minutes later, at 9:40 a.m., I posted an update in which PacWest Bancorp's share price had fallen 35% and trading had been paused more than 5 times already today. The entire regional banking sector exchange-traded fund ticker symbol CRE was at a new low, down 7%. When it comes to regulating, where are they now? That better be sarcasm, because, as I've already said, it was those gals who first caused all this trouble. Here, then, is Caitlin Long. She's the CEO of Custodial Bank, a crypto-first bank with an emphasis on custody, and she retweeted the quote from the Kobashi letter. Because of concerns concerning fractional reserve banking and totalitarian tendencies, the federal government is not a supporter. Rather to the above 100% reserves proposed by custodial bankrupt Caitlin Long here, they want 108% instead. Also, if you're wondering why we don't just guarantee that all of the banks are fully backed, it's because the typical bank, and it could just be a smaller bank, but I'm going off memory here. Yet, at any given time, only about 8% of a typical bank's total assets are actually in circulation. Therefore, there is a lack of funds. Obviously, if every living being decided to withdraw all of their funds from the bank at once. Yes, my friends, I'm talking about fractional reserve banking. That part of the letter was retweeted by Caitlin Long. This is consequently disseminated widely. She personally has 213,000 followers. And, she wrote, someone is making a last-ditch effort to convince the Fed not to raise rates. But I seriously doubt that will work. Is this going to be looked into as market manipulation by the SEC? What she's trying to say is that this is a major contributing factor to the issue. You probably recall the day that Silicon Valley Bank went under. Keep in mind why that was necessary. Since they should have anticipated such an outcome, and I will admit that they bear some of the responsibility for this misfortune. The possibility of a rate hike by the Fed should have been treated as a given. However, what they actually did was buy a ridiculous amount of treasuries. I don't know the exact sum off the top of my head, but it involved a large quantity of treasuries, which are often regarded as one of the safest investment options. You could look up the exact prices they were paying on Google, though I can't recall off the top of my head how much they were paying because it's been a few months. If you must know, the ceiling was not high. So, what transpired after that? Because, remember, if my recollection serves, there could have been like, oh my goodness, 10-year terms. I admit that it is possible that I'm wrong. Whatever it was, though, these investments would take a very long time to bear fruit. Therefore, buy them now while interest rates are extremely low. The Federal Reserve then raises interest rates. Okay, I guess that works in theory. If you give it the time it needs to develop, the whole duration of the period. The only option left when a bank run occurs and you don't have the cash on hand to cover withdrawals from your own clients is to sell off your assets. But if the Fed raises interest rates and you have to liquidate your assets and you lose money doing so, you're insolvent. So, once again, it's a combination of incompetence on the part of Silicon Valley banks and failing to anticipate the likelihood of such a thing happening. That's as stupid as it gets. The Fed has also broken things with their actions. As far as I'm concerned, though, the Federal Reserve is ultimately to blame because it is they who introduced the practice of fractional reserve banking which, by the way, is a regulatory mandate. That's why we'd never be in this pickle without it. Personally, I'd always point the finger there first, but after that comes the Fed and other factors that we will learn about tomorrow. Will there be a subsequent increase in interest rates? These bank shares are falling as a result. Why are they feeling so low? The market is aware that the more interest rates are increased, the less valuable the treasuries held by financial institutions become. And how likely is it to happen? This isn't the only issue, either. Is there a chance that that might trigger a bank run? That's another cause for alarm. Because of concerns about possible bank runs, the value of these stocks has dropped. You can also see the big picture here. If this occurs, it will be game over, man. Do you see how quickly it descends into insanity? Fox Business Network's Charles Gasparino also has an opinion. He also retweeted the Kobayashi letter and added that, according to Liz Claman and Neil Cavuto, 24 folks, 24 banking executives estimate that there are as many as 24 regionals with balance sheets similar to First Republic, Silicon Valley Bank, and Signature. Do we then have an epidemic on our hands? However, Jim Cramer assures us that there is no need to panic because there is no infectious disease outbreak. Right. Inverse. Right on, Cramer. As evidence, consider this tweet from April 20, coming in from your favorite watcher guru. Jim Cramer says the failure of First Republic Bank may signal the end of the banking crisis. Is it what caused the stock market and banking stocks to drop today? Disastrously. Sure, whatever. We're used to witnessing drops of 25% to 35% in a single day. This is cryptography, man. Here, we discuss the topic of legacy finance. Here, we discuss stocks and financial institutions. That's outside the norm. It's not unheard of, but it also doesn't happen very often. Okay. Certainly not the norm like in cryptography. However, check out this. We have Jim Cramer up front. In case you needed proof, here's a piece from April 25th. And I just want to highlight this bit right here on your screen, where Jim Cramer explains that this awful time for First Republic is distinct from the 2008 pandemic. One major change has occurred since 2008, he noted. There is no widespread infection at this moment. Once a favorite of the affluent and famous, First Republic Bank is currently experiencing a terrible crisis. However, the situation is safe for everyone else, quote end. Okay, Jim Cramer. The Kobayashi letter from this morning also reports this. This morning, CAC and West Bancorp lost 35% of their value. Okay, everyone else can relax now. How in the name of everything that is holy does Jim Cramer still have a job? What I meant to ask is why anyone is taking this seriously. Is anyone actually listening to him? Is the only reason he's still being followed now for laughs? How come you're always wrong about the things that really matter? Oh, Bear Stearns. Great people. That was in 2008, right? Oh, stop acting like such a fool. To put it simply, Bear Stearns is fine. Then, a day or two, or however long it was, it crashed. It's funny in a macabre sort of way. How can he be so wrong all the time? Incredible as can be. And it does raise some questions. Then Metalman presented this. James Murphy is a lawyer who uses the Twitter handle Metal Lawman. He also offered his own insights. The banking crisis had ended, he said yesterday, because of the concerted efforts of Jamie Dimon, Janet Yellen, and Jim Kiss of Death Cramer. And it's not as bad as it was in 2008. Trading in some regional bank equities was halted this morning, indicating the sector as a whole is not doing well. It's not looking good right now. The likelihood of a Fed rate hike tomorrow has diminished. JP Morgan cannot repurchase control of all banks. Morgan, J.P. They ultimately acquired First Republic's property and subsequently Meta's. Lohman claims the Fed will likely tell someone here named Mick if they decide to reverse course and not hike rates by 0.25 percentage points tomorrow. He claims in the Wall Street Journal, "I'm not familiar with the Fed whisperer," in an effort to prime the market. And as of the time this was recorded, I have seen nothing unless I missed it. But you could see an increase of 0.25%, which is what most people seem to be anticipating. Naturally, if that happens again, it begs the question, is that something that might cause alarm? What do you think? Will this prompt people who have money invested in these banks to start freaking out? Would people start withdrawing money from banks in panic? These are all very genuine factors that are being taken into account. What does that mean for the value of your cryptocurrency? Well, look, again, with the Republic just collapsing there and JP Morgan assuming control, the Fed assumed control, and JP Morgan ultimately acquired it. The markets were unconcerned. Is it true, though, that if banks start failing one after another, nobody will ever care again? Since cryptocurrency has traditionally been seen as a high-risk investment, the question naturally arises of whether or not people will be selling their holdings and, if so, to whom? Do you plan to exchange it for dollars? What are you going to do with it? What are you doing? Just about anywhere you look, there's a bull market. When one thing is failing, it must be transformed into another. Please explain. Is it gold or silver? Is it property or land? Is it made of something else? In what way? Is it a product of some kind? Which way does it head? What happened to the bull market? The question then becomes whether or not crypto is going to act in this manner. The Bitcoin masses, of course, believe that this is the ideal time to invest in Bitcoin. And they do understand. In theory, yes. This is a mind-blowing idea conceptually. However, Bitcoin has never faced a crisis like this before, so no one can be sure. There are bets being placed on both sides of that, and time will tell which one is correct. Since this is an awards show, I have no choice but to continue following developments in the crypto world. Yes, you're correct in saying that. There is kid-friendly censorship available. I'm not a financial advisor, but you can rest easy knowing that I've got your kids' futures covered. My words here should not be used as a basis for making any financial transactions. Please like and subscribe my channel. See you later, bye.